This conference will now be recorded.
Okay, well, good morning, everybody. This is Frank Gray. I am here just to get things set up for the star of the show, Shanon Stalinsky. I'm going to see if I can do what Dario taught us to do. Click window. Yeah? Did I do it right?
Yeah, you're sharing.
I'm not seeing any slides.
Oh, you gotta click on the tab, the PowerPoint, on the tab on top.
Yeah, here we go. And boom.
There you go.
Okay, very good. So, I know I'm not speaking to a large audience, but this is going to be recorded and probably viewed by thousands. So let me just say, by way of introduction, that Shanon Stalinsky, our instructor today, is an extremely competent loan officer who is one of our top producers at Jackson Henry Mortgage. She actually took the top spot in May with 10 closed loans. And today she's going to go into other areas of things we don't normally think about, people who don't qualify necessarily for normal loan products, but for what we're calling exotic loans. So let's give it up for the one, the only, Shanon Stalinsky.
Hi, good morning, everybody. That was a great introduction. Thank you. Okay, so today it's exotic loans, is what it's called. It's going to be the PG version, I guess, for some of those that were thinking this is going to be woo class. So basically, what we just want to go over is everything we've gone over. Our standard conventional FHA, VA loans. Outside of that, there are going to be some other products that people are going to be looking for, and we've actually heard a few of them. We'll get into that. This is a little intro about me, that somehow everything is misspelled. What? Oh no. And it's all gapped. Um, so anyways, we're just going to move along that then. How did it convert? Okay.
Maybe it's the older slide, the other one.
Yeah, I had two of them. Maybe I should have just put it on the slide.
I think it's probably maybe doing that to all.
It's going to be everything. Okay. So anyways, our class outline today. The 5 loan programs to help you and your buyers and make you look like a rock star. Because that's what it's all about, is getting the business and retaining them, making sure that you're getting a person that we can find a loan for if they don't fit within your standard conventional VA, FHA financing. We're going to go over what a loan originator should do for you, the loan process, application overview, and then a link to your email signature. Oh no. I should have looked at this before I put it on here.
You want to try on the other one really quick? You can just unshare.
Yeah, let me try on the other one.
So click stop sharing for a second.
Oh,
At the bottom. And then you can add that.
that's really hard to read. Okay, so it stopped sharing?
Yeah. But they can still see your face at least.
Okay. So keep smiling.
Yes. Keep smiling. That's what you want.
Okay, let's see if this one.
And now you're gonna have to go and call over.
I know. So I had him email it because we were downstairs. Better. Okay.
There you go.
There it is. Okay.
So yeah, go back to your Windows screen, the Windows at the bottom.
It's still spelled wrong.
So go to there,
Go to meeting.
go to share. No,
Oh, I'm still sharing.
I don't think so. So click on your share at the bottom. And then Windows. And you'll see that.
This one.
There we go. And then you can full screen it. Click on present.
Okay. Is it all on there?
And then just go to home real quick on there. I guess that should be, I guess home, yeah. Which one is it? I'm trying to remember which one is the one that's present.
Hmm.
Oh, okay, so the very top on the red line, like towards your save file, the save button,
The
there's a
save button.
little play button right next to it.
There it is. Okay.
Okay, there we go. Did it show up on yours?
Okay. Yes.
Okay.
Is it?
Yeah.
Oh, okay. So, okay. Perfect. Okay. Sorry about that, guys. Okay. This one's a little bit better to read. Okay. So the biggest one is going to be, we've had a lot of increase on the DSCR loans. What that is a debt servicing coverage loans. What this is for someone who wants to buy a property. They don't necessarily qualify as just a standard conventional, and they want to use the rent income that they're going to be getting from that loan or from the property itself and using to qualify that payment for this particular loan. So behind the scenes, there are a lot of little things that we'll be looking for when we talk to your borrower, but this is strictly just the basic outline when you're talking with someone, which you'll need to know. The requirements for this loan is 640 and up. It's up to 80% financing. So before they had it at 25%, there are some that'll do up to only 20% down now. And it's for investment properties only. You cannot take a primary residence, say it's going to be your primary, and then show that you're going to be getting rental income on it. You can have up to 20 properties, and they actually will go up to $2 million. Now, anything that's considered a jumbo loan that's going to be over $1.5 million is going to need 2 appraisals done on that. We don't get a lot of those, but if we do, there will be 2 appraisals on that. Both are going to be ordered at the same time. They're going to be reviewed upon each other. It's no big deal. It's just an additional charge. They'll have to pay double the fee on that upfront. So you do have to have a minimum of 12 months reserves. What that means is the mortgage payment itself, you have to show 12 months somewhere, reserves on that. We can use 401k statements. They'll actually use a percentage of that. Anything else, business statements, bank statements, just anywhere where we can get the assets. And then we are going to be looking at 2 months consecutive bank statements. And with anything else, it's standard. We need to make sure that they qualify, that they don't have any, for one, they don't have any accounts going negative or anything like that. And it's not available for cash out loans. So this is just strictly for the purchase of the property. It doesn't include any improvements. If there was any improvements that needed, they would have to just do that outside of this loan on there. They don't give additional cash out on this, on investment properties. And then, so the other thing is like the hard money loans. So we're aligned with someone that is doing the hard money loans. So basically you would have your client call us. We would send the information over to the other company. However, if they go to a hard money loan and let's say that they use them, they buy that property, it's a really high interest rate. The interest rates are going to be, let me pull this up, anywhere from 9 to 12% right now. And that's just depending on the circumstances, credit scores, loan to value. With that, if they get in a hard money loan, that's really kind of like a temporary loan. They needed to buy the house because it doesn't qualify for conventional or FHA financing, whatever the case may be, that it doesn't have floors, it doesn't have walls, appliances. If they wanted to buy this distressed property, they would get the hard money loan. Then at some point they would need to refinance that. So what we do is we go ahead, pre-qualify them for the refi on that, making sure that they do qualify. Because a lot of money, people are thinking, oh, I'll just get the hard money loan, and then I'll just fix it up and then sell it. Well, in the meantime, it might have taken them longer. If they wanted to go ahead and do the refi at that time, they don't even know if they're qualified. And then here they're stuck with the high interest rate. Then they're forced to sell it. Maybe they wanted to keep it for an investment property. So what we do is we go ahead and pre-qualify them, make sure that they can refinance that once they've actually used the hard money loan. We're doing several of those, or have several coming up on that. And the reason we want to look at it is just with you, if you say, oh yeah, go get a hard money loan, and then they don't qualify for the refinance later, they're going to be kind of like a little bit salty on you, thinking like, oh, well, I thought it was just a temporary and then I can just pop it over. It's completely two different things. Hard money loans just for a band-aid, for a quick fix, and then put it over. And then, of course, you can do, they hold it up to a year. So you have plenty of time if they need to do renovations. Um, the other ones, I think we've talked about this before, and I always feel like I'll keep telling all the loan programs, and I don't want to tell y'all too many at a time. So what we're doing is just kind of going, those are our two hotspot ones, are oh, okay, and then these are out of order, is going to be our bank statement loan. I'm going to go back to that one. The bank statement loan, a lot of people are using those right now just based on the income, the self-employment. We still have a lot of people who weren't able to get the homes due to, they didn't file their taxes. Maybe they finished up their taxes. They were wanting to take a lot more, it costs money to do business, so they were doing the write-offs on that. So we have several that we're doing now where it's a bank statement. It strictly just goes off the deposits in your accounts. Now they do collect anywhere from 12 to 24 months. They are going to look at it. You can use personal bank statements even though you are independent, such as a realtor. You can use your personal statement. They're going to use 100% of those deposits in there as long as it comes from the business. Now, if you have a friend or somebody that's randomly just putting deposits into your account, they're not going to count those. It's actually just going to be the business, but it's 100%, divides it up, and they qualify you using that. On the business statements, if you do have a business account set up, say that you have everything going into an LLC, depending on how you do your tax returns, with that, they're going to add up the deposits and they're going to take anywhere from 30 to 70% is going to be the expense ratio. Because they realize on business, you are going to be on that particular one, you are going to be doing some write-offs, so like kind of taxes. So they'll look at that. You do have to have, okay, this is all out of order. What is happening? Somebody's got fired. Kidding. Well, I just wanted to have it up while I was talking to y'all. How do I go? Okay, well, that's a big fail. Somehow one of them didn't make it in there. On the bank statement loans, in addition to just using the deposits on there, you are going to have reserves, meaning as in your monthly mortgage payment, you're going to have a certain month's reserve in the account. You currently have to have either actually paying rent or in a home. You either can be paying a mortgage or paying rent. You can't just be, is that me, Mason?
That's like someone joining our.
Oh, okay. Perfect. Okay, so then you can't be living anywhere rent free. That's the only, and that's the biggest thing right now. We've had people, just living somewhere rent free while they're saving up the funds. If you do not show that you've actually been paying rent, and they will ask for copies of the checks. So you can't say, oh, actually I've been paying my brother. You actually have to show it. So in talking with that, if we do have someone, we're going to give them the advice on that, making sure that they do fit all those programs before we say, hey, yeah, you're approved, let's move forward. There's a lot of little things that we're going to be looking at that we don't expect you to know or you to ask them the personal questions. Send them to us, and then we'll start digging into it and then letting them know what they can't do. Make sure if they are going to be selling a house and then purchasing later that there's not that gap, that they can stay somewhere, they can pay somebody rent, but it does have to be documented. Then the asset depletion, basically, if they've had a lot of money into a stock account, a bank statement account balance, what they do is we can use that as income, meaning as in they've had this long term, they take it out, the balance, and then just divide it up. So if anybody doesn't have making a lot of money right now as far as their debt to income ratio, but they have tons of assets. I mean, maybe not in stocks and stuff right now, but at a point there was where, they were either just having to cash out, or we just use the balance and say, hey, if we spread it over this is how much you're getting. Anybody in that it also can be used for on the 401k, even if they take money out of the 401k, the balance that's left in there will still be able to use that as income. And then, of course, our manufactured homes. Again, we just kind of wanted to go over this one. We've gotten a lot of calls as usual, like, hey, is it financeable? Is it not? Because on the listing, it'll just, whoever's listing it will just say the standard conventional FHA. That's not maybe true. Sometimes they don't even put anything on there. So the things that you're going to need to ask is, if you have somebody that's interested in a mobile home, call the listing agent and just ask them, hey, is it this? Or we'll even reach out to them, ask the questions for you before your client wants to make an offer on that. The interest rates are going to be a little bit higher on the manufactured homes. They all now require an engineer certificate. That's something that they didn't have in the past. Now they do require, because they do want to make sure that it's permanently foundation, everything is good. You check for the tie downs, the skirting, make sure there's no wheels, any of the tags that are on there. We have to get the tags, we have to know the number, they pull the licenses, a lot of the stuff behind the scenes. But those are the main things that you're going to be looking for, is just, hey, what's the age of it? Is it permanent foundation? And then original location. That means it can only be moved from the dealership to the property. It can't be somebody bought the property, bought a used mobile home from somebody else, and then put it there. And they will see that tracking on there as far as the title, and it just will not work. So even if they say, yes, it was only here, most of the time they're not going to lie about it, because nobody wants to go through all of that and end up being a problem. At that point, you would either have to do a cash sale. And then here's my little slide. Again, this one's a yes, this one would be a no. Did y'all have any questions on those type of loans? Yeah. Just know that they're available. So if you have somebody that is wanting to buy an investment property and they don't think that they qualify, well, hey, now we can use the future rent to qualify for that payment, and that's it. We're not going to be looking at anything else of theirs. It's just that, hey, you're buying this house, you got the great credit, you have the history, everything fits. It's just that we're going to take this rent and put it towards this, and as long as it makes sense, they'll lean on it. You have to have it anywhere from 20 to 25% down on the property. So those are coming up, and we've had a lot of people wanting to do those because, with the rental investment properties, everybody's like, oh, let's get an Airbnb, let's do this, do that, rental. It's just been a lot. So a couple of things that we can do for you, what originators should do, is to help you get more business, which ultimately leads to us getting more business. We can work together with you and getting these loans. When we get it, we're going to look at every possible scenario, and if it can work, we'll make it happen. If it can't, then unfortunately, we'll at least try to help guide your client as what to do that can help them in the whether it be 30 days, 6 months, just giving them some type of guidance as far as how they can look to buy something in the future. What we do is we talk to your borrower. We tell them, exactly how the process is going to go, what we expect from them. And we try to tell them this all up front in gathering their documentation, and it depends on the borrower. Some, hey, here's your list. We need all this stuff. They'll get it to us. Great. Other ones, they'll get the bulk of it, then they'll wait. So in between that, we want to make sure that this file gets 100% approved before we meet our third-party financing. So, we call them, we say, hey, these are all the items that we're going to need. We are going to keep calling you until you get that stuff to us. And generally, everybody likes that. Everybody likes a reminder of what to do. We're going to keep you posted as to where we're at with the file. With one of the number one lender, UWM, we actually will just add you to our tracking system where it'll give you an alert. Hey, the appraisal came in. Hey, we're in underwriting. Hey, we're out of underwriting. It kind of keeps you updated on that as far as the main points. After that, what we like to do is when I get a file out of underwriting, I let you know, hey, we got it out of underwriting. I'm going to be working with the borrower and getting a couple documentations. If we feel that we just need your help in doing that, you have a borrower that's super busy, maybe if it's a close friend of yours, you can just kind of help them like, hey, we kind of need this documentation pretty quickly. Because the process does go by fast, but we're always just trying to get everything up front with them. And our average turn time right now for our clear to close is 13 days. Some are sooner, some a little bit later, just depends on with the borrowers. But we do like that. So then that way it just is a peace of mind for you. Hey, now you're just waiting for closing. That's it. Everything's good. We just wait for that. If it's a vacant home, maybe you can close sooner, you know. In multiple offer situations, which have been crazy, what we do is we actually call the listing agent. You know, you let us know, hey, will you call the listing agent? Will you let us know? Just talk to them, tell them it's a good pre-approval. And the majority of the time, they always want us to call. And the listing agent answers the phone, and they do appreciate the fact that they have someone backing up saying, hey, this is legit. I've actually looked at their income, their documentation, they're approved, great credit scores. We don't go in the personal side and tell them anything other than the good stuff, you know, that they're 100%, everything's great. And a lot of times we've already gotten their information and we've already pre-underwritten the file, so we know that they're good. So as long as, you know, they keep their job and everything stays the same. So with that, and recently because of the way that the market is shifting a little bit as far as, you know, who the people, FHA, they're coming back out. I have 4 under contract right now. People are thinking they wouldn't even get it done, but it's just us calling the agent. Hey, we've got them pre-approved. We have them in an FHA. The interest rate's a little bit better for them. Maybe the mortgage insurance is a little bit cheaper. Whatever the case may be, this is why we have them in there. And then we ask a few questions about the property, or we help look at the property. Say if you went to offer on something and we look at it. FHA is just going to be a little bit more strict on the appraisal, such as if there's a lot of rotted wood on the side of the house, the FHA appraisal will notate that. So we kind of also, you know, ask you or work with you, hey, they're approved for FHA, but please look at these things when you're showing them the house, you know, to make sure, because if they go under that, they've already spent their option fee, earnest money, which they'll get the earnest money. We make sure to help you protect that as well with the financing period. But that way, one, they don't get their hopes up in going with that. Listing agents generally don't want to do the FHA, just, you know, thinking that there is just something wrong with the financing. And it's not that. A lot of times it's just because mortgage insurance is cheaper. So we just educate the listing agent on it. And then, yeah, we've gotten 4 under contract lately. So that's great. I do list reports. I don't know if y'all are familiar with that, but what it is, it's a system that you can sign up with me. I can send you the link. You just accept the invitation, and anytime that you have a listing, it'll automatically populate your listing into flyers for open houses, and it gives, this is just an example of the open house format, gives a little brief rundown about the property that's actually just information that you've put in on HAR. So it pulls from there. It'll randomly pull the photos. You can change these out. It's going to have your contact information here, and then my contact information here on this side. So that way, if you are at an open house, they get the flyer. They know that, hey, you're working with the lender. Maybe they should contact me, or encourage them just to call, get a quick pre-approval, especially on the weekends. You know, the open houses, if they're right there, just have them call me. Most of the time, I'm always available because I don't do anything fun. I work a lot on the weekends. So you can always reach me the majority of the time. This just gives information about the property, schools in your area, just does a listing. You don't have to use all these marketing kits. You can just print them, pick the one that you want to use. It's completely up to you, but it does help. And that way you're not having to, you know, create flyers, do anything like that. And this is just, it's free to you. It's just, I signed up with it thinking this is going to be the best for y'all and easy, you know, especially with the ways that they're coming to market. This is just a link to the application. Bless you.
Thank you.
Once you have a borrower, contact us. We generally will email or text, whatever they prefer. We'll send over our link to the application. Some of y'all we already have set up to where the application is, um, it has your information and it has our information. So once they complete the app, you actually get a notification too. Hey, client so-and-so has started the application, and then it tells you when they finish it. From there, that way you know they're already gone, so I'm working on it. If you don't use the co-branded app, which that's fine, we usually will tell you, hey, your client started filling out the application, we'll start the process. And then we let you know, of course, when they finish it, and that we'll be handling it from there, kind of go over what they do and they don't qualify for. And I mean, really, that's it. I thought it was going to be, I only have an hour, and I didn't want to overwhelm you. I know, right? That's what I'm like. Oh, and I talk fast, so I do apologize. I'm trying to work on it, but I would get excited and I have a lot to say. There we go. So that's it.
So I do have one question, and
Yes.
it's like kind of about like assets. What kind of assets would y'all consider? Because you did mention kind of 401k. What other kind of methods?
So the 401k, the stocks, bonds. Was there something in particular that you had a client?
I was just curious.
Yeah, it's mostly. Of course, it'll just be the liquid assets. You can't have, if you have anything that's going to be tied up that you don't have access to, they're not going to use that. They're only going to do what you could liquidate if you needed to save the deal. And then I haven't had anybody, I can't think of anything weird. Most of my people are just stocks, bonds, 401k,
Bitcoin?
the standard. No, I haven't had anybody do that. Most of, I guess, because the way that it's been, that I just haven't had anybody use that. Maybe I'm hanging around the wrong people.
Earlier in your presentation, you said 80% LTV. Is that loan to value?
Loan to value, yes. That means anywhere from 20 to 25%. The average, what I'm seeing, is 25%. And what that is based on is the full portfolio when we get to that borrower. If they have a higher credit score, of course, it's not as, they consider as risky. So there's going to be some underlying issues in there, but just generally in talking, it's up to 20%. And then we can take it from there and then discuss with the borrower if an additional 5% needs to be placed down on that.
Yeah. Can you go back to that slide with all the loans, like the renovation FHA?
Yes, let me see if I have. Oops.
She said she talks fast. If she been available back in my high school, college days, if I see her dancing, we'd be through real quick.
The good news with the channel is like everything's fast paced, we're getting stuff done.
Yeah.
Good. It's good.
And I am. You can ask the girls. The way that I work, I just like to get it done. Everything's clear, and then go to the next one. Okay, which one?
There's like the blue one, and it'll set the very first, like I guess.
Oh, there it is. Okay, up here. Well, I don't have one that just lists the.
Or I don't know. It was like a blue slide, I guess. That one.
Oh, that one. Okay, yeah. Okay.
So what's that one about?
So this one is, sorry, I skipped this one because the bank statement loan, and there's another slide missing. The renovation loan, the FHA. What that one is say if somebody wants to buy a home and they want to have some upgrades into the home. The minimum is about $35,000. As long as they want to purchase a home, say they want to upgrade some of the countertops, they wanted to add, change out the flooring, they can go ahead and purchase the home with an approval to add that into the loan. So that way it helps them get the home that they want versus just the way it is now and then have to pay it later or have to get a different loan with a higher interest rate. This one is actually the same interest rate rolled into the loan over the 30 years. You can get up to $35,000 in upgrades. So if the contractor comes in and he's going to bid and provide, I guess, basically a bid or a contract showing, hey, I'll do the countertops, the flooring, all for $25,000. So we'll take that 25,000 along with his contract, put it with the purchase contract, and just increase the loan amount by that 25,000 into the loan, and then it's basically that.
I did not know that.
Mm-hmm.
Look, I was familiar with the 203K loan. I was always thinking that FHA was just, you know, you request how much you believe, you know, you needed upgrades, and they were rolling it to there. But you're saying a contractor actually does update it.
Yes. Yeah, they actually provide, yeah, they will actually have to come in, provide the contract of how much it's going to be. And then what they'll do is they'll take that, so when they do the appraisal, they'll actually see how much the upgrades are going to be used, and then they add it into the appraised value. Yeah, and it has to be by a contractor that is actually licensed, a licensed contractor.
Contractor that does what? I'm sorry.
The what?
It has to be done by the contractor that does what?
The contractor has to be licensed, or licensed and insured. Yeah.
Okay, are the contractors all licensed in Texas now?
There should be, but I don't think it's necessarily a requirement. If it is, there's several that I know that aren't.
Well, with the FHA, they have to be licensed.
Yes, yeah, and they have to be insured. Yeah, because they want to make sure, yeah, that they're when they're lending the money that it's actually going to get, it's going to be completed, or if in the process of that, because they'll start the repairs, of course, after the loan closes. And when they start the repairs, they want to make sure, you know, if they're on the property, the contractor gets hurt, anything like that, they have the proper licensing to cover that.
Personally, I think that everybody should be licensed.
Yeah.
And do something.
Yeah.
That might be the only democratic thing I'm thinking about, but,
Yeah.
regulation on it, because I've dealt with people who are not licensed. They take the money and run.
Yes. Yeah. And especially, what was it? Oh, during Harvey. Yeah. There was so much of that, and, you know, contractors just being overwhelmed, taking the money, leaving, and everything. So there's a bunch, and it's sad. But so that's the reason why they just double check and make sure, you know, and then plus that the upgrades are being what it says, because, you know, if they give the contract and say they decided afterwards, like, no, I didn't really want to do that, the borrower can't keep the money. It's already a signed contract going to that contractor. So it's going to them. It's not, you just get to keep the money and do your own upgrades if you wanted to. Yeah.
So then also makes me believe there's never countering or anything with that. Like if what the contractor believes what he deserves in his upgrades, do the vendors or anything counter or go back like, well, based on do they have someone out there that's estimating that as well, or it's just this is what they want and they just accept it?
So, well, there are some limitations on that. Say that, you know, a contractor came in and said, hey, I'm going to put granite countertops at 35,000. Well, if it doesn't really add value, there is a certain extent, they can't tell the contractors what to charge for that, but it's got to make sense. If they're saying, hey, this is 35,000 for countertops, realistically, it's really, because that value is going to be added into the appraisal. The appraisal has to exceed what they're buying it for and the upgrades.
Okay.
So it has to make sense.
Yeah,
Yeah.
It has to actually increase the value of the appraisal. Like if you're doing upgrades on something that's not gonna, you know, increase the value of the appraisal, then it doesn't make sense to
Yes.
try to even have that upgrade in the first place.
Exactly. Yeah. So they do look at that and make sure that it does make sense on that. Now, as far as price gouging or anything like that, I mean, it's say that they just ended up buying it cheaper and it still fit within there. They can't really tell the contractor what they can and can't charge for services like that. We haven't had anybody that's been called out on. So, I mean, that would be just something that, I mean, if it came up, I'll let y'all know, but I just haven't had anybody to do that. Usually the contractors, anybody getting work done, they'll usually go to a couple different people.
Are you still sharing?
I don't know.
No, just let people know you're not sharing.
Oh, no.
Because they're asking if they couldn't see the screen.
Okay, let me see. Let me go back to my sharing.
Either that or disconnected somehow a little bit through the cable.
Settings.
There you go.
We're back? Okay. That was not my screen.
I have another question. Y'all, does Jackson Henry work with new construction loans?
So on the new construction loans, we generally what we do is we'll do the permanent financing. The construction loan goes out. Now we are looking into ones that we can do, like a one-time close and the permanent. So if you have somebody that comes up, definitely talk with us and see if it's going to be a good fit. The majority of the time right now, we've been just sending them out, to the local banks, and we'll do the permanent financing when it rolls back around. So we go ahead and pre-approve them, make sure that they do qualify for the home, but the construction loan's handled somewhere else. But we're trying to trying to get it all.
Speaking of local banks, are there any banks locally that are hard to work with?
Hard to work with?
Yeah. Say First Financial or something like that.
So my experiences with them have been great. I haven't personally, there's not a local lender that I would say definitely stay clear of, honestly. I haven't heard any of that. Some of the other loan officers may have had some trouble, but I get along with everyone, so.
I have a question too. So, with you guys being LOs, are you strictly only dealing with Texas? Do you deal with Florida, Georgia?
So we are licensed in some other states. Florida, New Jersey. Oh, are we officially New Jersey yet?
I think so.
How about Colorado?
No, I feel really bad. I'm not all this because I personally am not licensed in all those yet. Florida's going to be my next one. So if you know anybody, of course, wanting to buy some vacation homes, let me know.
Well, see, Colorado is very popular with their new marijuana laws.
So I know, and that's crazy because there was a lot of people from Colorado moving down here just over the summer. Yeah, and then there was one guy that was from Colorado. He was moving down here and he wanted to do a marijuana business. I'm like, in Texas, that's the worst place that you want to be. Yeah, so he moved back.
But we will have marijuana legalized within the next 5 years.
I think non-Cuban, were they accepting that? Non-Cuban for marijuana, I think they were, or they were accepting, funds or something.
Yeah, there was something on that, and it wasn't in Texas. It was the out of state that they were. I forget what it was. If it was a legal business, then yes. If it wasn't a legal business, then no. Yeah. Yeah.
I'm surprised it's not passed nationally so far.
I know.
Because right now, if the Democrats wanted to, they got the president, they got Congress, they got the Senate, so they can do it.
Yeah, I haven't really been keeping up with that.
Because the problem is the deposits of money in the banks, that's the problem.
True.
And so you guys do or you don't do the construction?
They do.
Yes. Yeah. Yeah, that's it's an in between. What we have been doing is we're just aligned with somebody outside of Jackson Henry that handles the construction loan, and then we would do the permanent financing. But we have been working because we want to have control over both sides, so that way it makes it a little bit easier in going that way.
So I have a lady, and she has a business partner who just bought land in Georgia, like 1.5 million. And what he wants to do is he wants to build a community of townhomes there.
Okay.
And so she was asking me, like, would I be on board with something like that as he's developing to get these houses, like, I guess, financed or something like that.
Yeah.
But for me, I'm like, well, hold on, I'm a loan processor, this is a lot. She was just like, you close very quickly, so I'm just wondering, he wants you now because of she was saying of her experience with me. She was like, if he gets these houses going,
yeah,
and then you come in to like start getting, I don't know, like a go-to, I feel maybe.
Yeah.
Something set up like that, but they're in Georgia.
Yeah, talk with Joy and see.
Yeah,
about
But
the
if that's-
licensing.
If that's a situation like that, that's when you could try to get their license over there.
Yeah.
To work that purpose out.
Yeah, because then not only that, the company has to be licensed there as well as the particular loan officer that you're working with. So, if you're going to be doing those, then yeah, you'd have to personally get your license there too, as well as Jackson Henry. Jackson Henry would have to have it and you. So I know right now we're in several states, and I mean, they're just Joy's just signing us up, and because we have a lot of that. So I don't know which ones where we're at to date right now, but yeah. But I'm going to be getting my license for Florida on that, so that way I have an excuse to let me go check on that property. So,
That's right.
but yeah, no, that's awesome. That was awesome if you do that, because then their whole community, any of the marketing, you'll probably be on the flyers. They'll, hey, call, get pre-approved, and they're going to trust you so that way they'll know for sure it's going to be getting close.
Mostly for me, I'm just on I'm more on the processing, and I just want to ensure that they can just close
Yeah.
or whatever. But I think there's still a missing piece there for me on that end. But I'm just trying to see how it all can work out.
Yeah, so it depends on how you do that or how you're set up. So if you're going to just be doing, if you're staying on the processing side, because you're going to be technically under SOG. Yeah, we'll talk with Frank and Joy about that, of how to do that, and how to, maybe have like Frank or somebody come out there and then just like help you get that too as well.
It's just like, I don't know. It's just like, we want you to. I was just like, I think I'm just processing. Like, I'm just like, I don't know.
Yeah.
I don't really know the whole.
Yeah, let's talk about that and then see how we can get a game plan together like that, because that's definitely something that you want to capitalize. We want to help you, get that business too. Sounds like they want you, just want them back. No, just try. Yeah, we can talk about that and see how to structure that for sure. But thank y'all for having me today.
Thank you.
I got that in like.
I learned a lot of stuff.
Did you?
Yeah.
Good. And then, of course, anybody that needs to contact me or have any questions outside of this, here's my cell phone number.
Unplug the cable.
Oh, I'm not still doing it?
Well, it's sharing here.
Oh.
It is?
I guess.
Just here? What's happening?
It's fine.
It's my course. Okay. So yeah, so here's my cell phone number. If y'all have any particular questions about any borrowers, just feel free to text me, call me. I usually answer my phone unless I'm doing something like this in a conference or meeting or something, but I'll let you know. Is it showing? Okay. But yeah.
Still have that Abby Realty logo.
Oh, I do? Well, it is Abby though.
Yeah.
That's funny. Yeah. Oops.
Yeah, it's like what
I just throw it in there every now and then. It's like, boom, remember the days? Okay.
All right, well, thank you.
That's it. You're next?
Lady says about
15 minutes.
Who's on there? Oh, you're welcome. I didn't even get to see who was all on here.
What?